Good evening, everybody. All right. We had a few suggestions in the chat room this afternoon of the type of topics we want to go into. So I'm going to kind of concentrate pretty heavy on the just overall market analysis. And the reason I want to do that is because through the years, I have been whipsawed so many times, like what we saw this morning in the Dow, where it was opening up positive. It wasn't magnificently positive, which was kind of a little bit of a suggestion that maybe there wasn't a rip-roaring change of investor sentiment, which makes the T-lines a very relevant factor. And this is why I always kind of sit back and say, all right, let's see what happens here at the T-line. And as you saw, we went up to the T-line, and this is one of the important things about the T-line that you should always keep in the back of your mind, is the T-line acts as a resistance. But the T-line isn't something that I want to say everybody has on their chart, that anybody has on their charts. The 8 exponential moving average is not a major indicator that everybody uses. So not implied, but the reality is that investor sentiment constantly uses the T-line as a definite support and resistance level, kind of a natural support and resistance level. So the reason I'm pointing this out is if nobody has the T-line on their chart, and we can see that every time it comes up to this level, the T-line acts as resistance, that's got to be a very important indicator to tell us that this has got a kind of a Fibonacci characteristic where the natural resistance level is right here. So why does it do that? Have no earthly idea. It just has been working for years. So this morning I had some good shorts on, and they started taking it positive. The shorts all went positive. And in the old days, I would have said, oh, man, the bulls are back here. Let me close these all out. And at the end of the day, I'd be just kicking myself that I didn't wait. And now I have a factor to make me wait. I want to make sure that the markets have decided to close above the T-line. We can see that the S&P 500 opened positive, but it faded during the day. And take a look at what's happened in the NASDAQ. Hanging man, evening star signal, and they just can't get back up above the T-line. Does that mean tomorrow we might not see a big, huge day? Certainly. But right now it's telling us that investor sentiment is not showing any great vibrance or any great strength. Now, we can also analyze what's happening in some of the other indicators, like crude oil. We can see we had a little bullish harami, hammer type signal. Watching to see what it's doing from here, right here at the 50-day moving average. If you're trading crude oil, it becomes a good trade. If you're trading oil stocks, you start watching to see if this is an area where the oil stocks are picking up strength. Gold, flat. You see it popped up, but now it's trading flat. What's that tell us about getting into some gold stocks right now? tells us pretty much we don't want to be there. Trying to think of what other things we can look at. Soybeans, what are they doing? So, because we have the visuals as far as what the overall market trend is doing right now, I mean, it could be a couple things. It could be a bearish J-hook pattern if it breaks down through the 200, or if it supports here at the 200 but stays below the T-line. It could be a wedge formation. So as long as we know right now there isn't any relevant dramatic bullish force, we're waiting to see if there's more bearish force. You pretty much have to make your assessments as to how many longs do you want to be in versus how many shorts. Now, there are longs that you can stay in, and that's based upon the strongest of the candlestick signals, like the kicker signal. That's why we recommended TCP the other day, because of the kicker signal. Now look what it did right here at the 50, kind of a bullish doji sandwich. Now, when I say look what it did right here, a bullish doji sandwich, if we know the kicker signal is a strong signal, and we know the doji sandwich is a good strong signal, we don't have to be guessing what's going on here. We've got a pretty good assessment that the bulls are still in this price move. Anytime we can identify a pattern, such as our IDT, not a big volume stock, even though they did trade almost 200,000 shares today. You can see there's an obvious J-hook. Now, as we were illustrating this weekend, we can identify that there's a possibility of a J-hook pattern. We can also identify that as soon as it hit the T-line area, we did a doji. We also did an inverted hammer, and then bullish confirmation. And where did this all occur? Supporting off the T-line. So when you start adding up all these little individual factors, it makes the credibility of your bigger analysis or the pattern movement that much more viable. Now, when you're in a position where we can see the doji's bullish confirmation, there's just one little simple trend rule that we can utilize using the T-line. As long as it stays above the T-line, you can stay long. But each day, you can make a calculated assessment to say, all right, if I'm going to stay long, what do I need to see tomorrow? Definitely need to see them open up positive and trade positive. If they open it lower and start trading lower, what's that telling us? Number one, they're not supporting at the T-line. They're coming back down through it. And two, you can see the bullish trajectory is disappearing. So common sense says that the bulls aren't there. Let's close that out. That was, which one? I had one that, I'll find it. So once we know, or because we know what the investor sentiment is in the candlestick signals, if we can see a shooting star doji, even though we're not in the overbought condition, like over here, but what other assessment can we make looking at this chart? Well, obviously, there was some resistance here at the 200-day moving average. So if it starts trading lower today, what do we want to do? We want to close out the position because it's obviously not opening positive and going through the 200, it's going the opposite direction. So where would be a likely place to put a stop loss? Right here at the low. Because logic says if this opens and trades back below this level, we know the bears have started taking control. Oh, here it is, ACAD. Another one where it did close below the T-line. So what do you see as far as the the strength of the signals here and the trajectory. Obviously a doji, a shooting star, and now weakness. So the fact that they closed below the T-line was your number one alert. And the fact that you can see that the strength is pretty much going away, close out the position. The nice thing, and I always come back to this, the nice thing about candlestick analysis is right now, if I needed 3 trades to put on tomorrow, I've got at least 15 or 20 different good charts to look at today. Would I short? No, not necessarily. You can see that the strength of the pullback is not really that dramatic. I just wouldn't be long. We'll get to the shorts and show you reasons to be short. So here's another case where AMCX, it needed to close above the T-line to stay in it. Now we still have the same benefit of knowing what this signal is, a doji. And what's our simple rule of the doji? They're going to move it in the direction of how they open it tomorrow. So if they open this lower and start trading lower, close out the position. If it opens positive and starts trading positive, now we've got another signal that's forming off the T-line. A doji sandwich. Where's our next likely target? So because we know what should happen after candlestick signals, we can make a much more educated, calculated investment. For example, core is in this fry pan bottom. Well, for crying out loud. And where did it close today? Right about here. Right where this fry pan bottom started. For AMCX, what prevents you from selling during the day? Because I'm going to sell based upon a candlestick sell signal. What was the sell signal today? That's kind of a trick question because it didn't do a sell signal during the day. So if it's already down here, what's my biggest fear at that point? That maybe they drop it all the way down here. You know, I can find a place where it's too weak to stay in. But otherwise, if I'm sitting here watching it, I'm watching to see whether they get it back up above the T-line. On the other hand, let's say I did close it here. Wouldn't be unusual. And it came back up here. Now I can still make an assessment of whether, if it opens positive, I want to get back in. If it opens lower, all right, maybe I could have gotten out here versus here. So when this this one, yeah, I probably would have sat with it because remember what was going on. Even though the Dow was trading lower, look what the NASDAQ was doing all day long. It was trading positive. So, and what was that telling us? When the NASDAQ was trading positive and the Dow was trading lower, that there wasn't any major consensus that this market was selling off. It was just kind of waffling. So back to core. Fry pan bottom, doji. Yeah, I would. I'd be a buyer on strength tomorrow. Remember the doji rule. It's going to move in the direction of how they open it. So if they open this lower tomorrow, what's the doji rule telling us? That this resistance level is still acting as a resistance. Look for it to probably pull back. If it opens positive tomorrow, what's the doji rule tell us? It's probably going to trade positive, creating a doji sandwich. So we may get out of the trend is down even though it's above the T line. We may stay in if the trend is up even though it falls below the T line intraday. Yes. Yes, remember the T line is just an indicator. And our indicator is as long as it doesn't close below the T line, you can stay long. If today's NASDAQ candle were green, would that be a bullish harami or are the stochastics? Now, it's just the fact that it's a harami. Doesn't matter whether the body was red or the body was green. It was just telling you there was indecision going on. Isn't that an evening star being at the top and at major resistance? Oh, Jake, on which one? Oh. Yeah, core is a possible doji sandwich, but what is the obvious right now? That what pattern is setting up? The fry pan bottom. So remember, if it opens positive, what's that telling us about the fry pan bottom breakout? It's breaking out. And another little tidbit considering what the markets did today. Look what usually happens when you're trading on a pattern or trading a pattern. It was still trading positive even though the market was soggy. So if you have some place, what one were we looking at? I forget which one it was. Which one was it? AMCX. Yeah, this didn't bother me. Now, had it started trading below the low of yesterday, that's a lot of selling pressure. That would probably have been something more to be concerned about. That's probably where I would have stopped out. Now, if it turned around right there and started coming back up off my 10-minute chart, I might buy back in. But today was not any day where you had anything telling you that it was there was any consensus of an overall selling market or buying market. It was just kind of a waffling day. Intelsat. We can see where it obviously pulled back to, right here on the T-line, and did a doji type day. So what's the next criteria? Definitely want to see this open positive to kind of continue our pattern. If it opens lower, what's it telling us? It's probably breaking this range. You want to be out of it. Now, if this opened lower, and I closed it out, and it traded down here, and then at the end of the day it came back up and closed here, yeah, I'd get ready to buy it back knowing that it didn't close below the T-line. So on the short side, because the markets were not showing any resiliency as far as strength, that meant our short positions would just continue to hold them. Same scenario on the short positions. Just kind of stay long until you see a sell signal or a buy signal, and I would say an attempt to come back up above the T-line. Roku, the same scenario. Now, look what it did today at Doji. Makes this a very simple trade down here. Where would our stop be? Right up here at the high. We wouldn't want to see it come back up through there. If it did, what's it telling us? More than likely they're bouncing it back up to at least to the T-line. If it opens lower, what's that telling us? Doji sandwich still heading down toward the 200-day moving average. So looking at the charts, we can at night make a decent assessment of what we might do tomorrow. We've got not really a signal, but a doji today. I'd still have a safety stop just above the T-line on this one to cover any short position. An ATVI, because of the kicker signal, telling us the strength is definitely in this direction. Yeah, Charles, that's one of the things I always had to kind of filter out in my assessment. Winnebago having record sales, but somebody's selling it for some reason. I may not be smart enough to figure out why, but I think they did come out with earnings, and it started selling on. Why would that be? Well, maybe some of the smart money is thinking, all right, they had record sales now, but things look a little bit dismal for their future. Let's get out of this position. There you go. Yeah, projections for the future may not be enthusiastic. So this was because I was one of the worst investors in the world before Candlesticks came along. That was what kind of really sunk into my head that, man, I'm buying this because it's gapped up. They've had record earnings. Well, wait a minute, what's happening here? I soon learned that I let the charts tell me what to do versus what I think should be happening. And there was numerous times where I was buying on good news and selling on bad news, and it always seemed to be the wrong thing to do. I pointed this one out because you had your best friend signal that didn't confirm. Now you've got a bullish harami. What's that kind of tell you? Pretty much that the selling has stopped. This is what I call the stutter step, or kind of a derivative of your double bottom. That if this starts trading positive, you've got a best friend signal bouncing off the 200, a stutter step starting to take you back up. That's pretty much telling you that the bulls have taken control. They may have not have stepped right in and started going at it, but the bulls started taking control, had some more selling, and the bulls are back in control again. Okay, as we're looking at these type of markets, what sectors are acting the best? Well, we can see Labu is a bearish J-hook pattern. Could be another wave to the downside. If you don't like shorting, you can always go to Lab D, which looks like a bullish J-hook pattern. Notice your inverted hammer, bullish confirmation. Kind of figured, Marshall, that you were taking a look yourself. Nugget, indecisive, still above the T-line. Now, if it opens lower tomorrow, might close it out right away. Why? Because you can see how the trajectory is starting to diminish. That might be heading back to the 50-day moving average. What's our basic rule when they break out through a resistance level? I usually come back and test it to see if it's going to act as support. Now, knowing that also gives us a great advantage in the sense that if we see it come back down to the 50 and do buy signals, what's that telling us? And now probably the next likely target is up here at the 200-day moving average. What was the lab D? What's LABD? All right, the biggies. Netflix. Nothing great, but notice what it was trying to do today right here at the 200-day moving average. Kind of a hammer, a spinning top. Telling you there was indecision here. So now you watch to see whether the buying starts at this level. Tesla. Nothing you can really sink your teeth into. So one of the major aspects of the visuals of candlesticks is there are times when you can tell when it's time to buy. There's times when you can tell it's not time to be either long or short. And right now, Tesla is in that mode. NVIDIA. NVIDIA, notice what it's done. And you're setting up for your bearish J-hook pattern. Doji. If I was going to short NVIDIA, even though we're in the oversold area, where's my likely spot? Well, if it came back down through the low of this Doji, I'd be shorting it because I'd probably have kind of the same prospects as a bearish Doji sandwich, continuing the bearish J-hook. Apple was the best of them today, but it wasn't very good. It was better during the early part of the day when it was trading up here, but came right back into the range. So if you look at this, basically what can you say about it? Really not much of anything. Which kind of, again, illustrates that sometimes there's times to be going short, there's times to be going long, and then there's times where you don't want to be doing either. If it came up and touched the T-line in the oversold area, what type of signal would it be setting up? If this was a open positive and came up here, there you go, morning star. Definitely don't want to be shorting a morning star signal in the oversold area. And AMD, another one where you got the bearish J-hook pattern, but it opened positive today and didn't really do anything. This is a good reason why some people say, well, shouldn't you be shorting it here with the anticipations going further? Yeah, I would rather be a little bit late shorting, but confirming that what it's doing versus being early and then maybe sitting through a bottom situation. Oh, I don't know. Was that on NVIDIA? If that's the case, that's going to add a little bit more weakness to that stock during a weak market. Okay, so there are still some good charts out there. Funko. See, you had a little inverted hammer type signal. Now remember, a true inverted hammer has a tail that's 2 times greater than the body. So it's more like a kicker type signal. That's got a little double bottom. At least your first target might be a pop-up to the 200-day moving average. Now there's a few here that you can keep on your watch list. Weibo. Notice where it opened today. At or above the open of the previous day. So what's this kind of setting up for? That if it started trading positive, what would you have? You'd have a bullish flutter kicker signal. ATHM, same scenario. If it opened positive, you have a bullish flutter kicker. Billy. gapped up above previous day's open. You can buy on positive trading, bullish flutter kicker off the 50-day moving average. And Baba also did kind of a bullish flutter kicker. Notice how it gapped up and did a doji above the open of yesterday. So if it opens positive tomorrow, again, using the simple doji rule, it's going to trade positive, which means if it creates a bullish candle, if you took the little flutter out of here, you basically have a kicker signal. Do you find the stutter step only with a failed best friend? No, just any signal where you see a start up, and then it pulls back, and then you get another buy signal. So it's kind of a double bottom type setup, but it's not necessarily because of a best friend signal. The best friend signal in that case just happened to be the bullish signal. Here's another. Cena might also be in the prospects of doing a bullish flutter kicker. We were pointing out today, and I couldn't find the other one. Maybe I did. This is what we call the message. Notice you had a inverted hammer doji gap up. But it's a dark candle. But what's the message? The message is they had a big gap up with profit taking. So what do we want to do from here? We want to see when the profit taking is over, because that tells us the bulls are still there. I don't know whether this was the one. Yeah, this one was getting closer. What you need for a message is a gap up. You don't want to see it come back down into the trading range. Now, this is one that's probably close enough to the trading range to say, this is not so much a message as it is a bearish belt hold. And remember what the results of a bearish belt hold will be. So if this had Winnebago had closed right here as a dark candle, leaving a big gap up, that would have told me the strength was there. The fact that they brought it practically right back down into the trading range was an indication that the bears were still coming after it going into the close. On the bullish flutter signals, if you got in, I think the sell stop would be below the low of today's open. Yeah, that's usually a good. If you bought and you thought it was a best friend signal, you wouldn't want to see it trade back below the low of that day. Let's see, what else do I got here? DRYS, kicker type signal, telling you there's probably some more upside on this. And notice where the kicker type signal occurred, right here off the 50. And Coop, Joel, hang on to your individual ones until I tell Jim to do the double line. Then just type it in and we'll look at them. And Bruce, I got to reread all what you wrote, Bruce. Bruce, if you're in here, try to do all that analysis with one or two lines so I could read it real quick. All right, so here's our bullish harami, kind of double bottom, and look where it closed, right here off the, or right at the T line. So what's that tell you? It tells you if they open this positive, not only are they confirming the bullish harami, but they're telling you the T line is not acting as resistance. BRS, another one that's telling you there's some buying occurring right here on the 50 with a little inverted hammer. Another one that could likely bring you back up to the top of the trend channel. Okay, so stop losses. Somebody mentioned they want to do stop losses. This is why knowing what you should be expecting from simple signal rules. For example, what did we need to see in Red Hat today if you were long? You needed to open positive and trade positive after the doji. It opened and started drifting, so where was the logical place to put your stop? Right at the bottom of the doji, because logic says if it came back down through there, it's not going in a bullish direction. It's going in a bearish direction. So the number of times I've stopped out right here has saved me from these type of situations. And the reason I always put a stop in is because when I used to not put in a stop, I was always in these type of situations. So I have found it's much more gratifying to have a stop and lose a little bit of money and then look back at the end of the day and say, man, oh man, did I do the right thing? Now, this is why you want to see what happens. We had kind of a wedge formation that broke out nicely. But when they close back below the T-line, again, the probabilities when they close below the T-line are extremely strong that you're now in the wrong position. At the low of the day, Jake, the trading range. So, when things start closing back below the T-line, close it out. The probabilities go against you. So what's the worst case scenario? That they close below the T-line, the next day they do a bullish signal, you can always buy back in. But as long as it's closing below the T-line, again, the probabilities are stacked against you at that point. So AKRX. See, came up through the T-line, indecisive. When it closed back below the T-line, what did that tell us about our upward trajectory? It wasn't going to be very good. So here's the one statistic that has dramatically improved my profitability and helped my ego. That when I put it in my head that I knew that 1/3 of my trades or 30% of my trades were not going to work, that allowed me to close out positions that weren't working much more quickly because I didn't have the mental stigma on my brain that, boy, am I stupid, this didn't work. I'd look at it and say, all right, closed here, close it out, it didn't work. So again, anytime I see it close below the T-line, I know the probabilities are greatly in my favor that I should be out of that trade. What does a failed belt hold signal indicate? What does a failed belt hold signal? Joel, you'll have to pick one out. VSI short? Yeah, possibly, if it opens lower. And the reason there's added evidence of going short is Notice when it came up today where it failed, right there at the T-line. Oh, shorts, electronic arts. Went through the resistance level. A little kicker type signal. Telling you there's probably a wave 1, wave 2, wave 3 in progress. Smegmo. Wave 1, wave 2, evening star type signal, wave 3 in progress. The slow curves are my favorites. Slow curve, lamb. Slow curve, slam. So this kind of they work just as well on the bullish side as on the bearish side. IMGN, slow curve, slam to the downside. And DNLI, another bearish J-hook pattern. Notice when it came up to the T-line, what did we have? A bearish Harami telling us the buying had stopped. And notice today it used the T-line as resistance. Wave 1, wave 2, wave 3 in progress. COHR, same scenario. Slow curve, slamming it to the downside. Now, some of the strongest ones to the downside, look at what Bristol Myers did the other day. Kicker signal failure. I mean, they took that one down hard. Hold on, I'll answer your questions here. Only about 3 away. Evening star signal, doji sandwich. Another one that's got a high probability of going into wave 3 to the downside. WRK. Humbug. Failure. Wave 1, wave 2, going into wave 3. And HRTX. Slow curve, breaking down to the downside. Okay, Joel, which failed belt hold signal were you looking at? What length, displace, etc. do you use for your T-line? The 8 exponential moving average. Hasbro. Remember what the definition of a belt hold is. A belt hold is where they've brought it back up into the trading range. Doesn't necessarily have to be a signal. A belt hold could also be a piercing signal, closing more than halfway up this candle. It could be a bullish engulfing, completely engulfing that. It's just that or it could close right here and still be a belt hold coming into the trading range. Which one were you looking at, Mr. Candles? Oh, yeah, there's nothing you could do there except you probably wouldn't have been in this one yet. What would have been your criteria to get into this position? You want to see a candlestick buy signal and a close above the T line. But on the other hand, let's say you did buy here. If they gap down below the previous day's open and go the opposite direction, or if they gap down below the previous day's open, what type of signal should you be anticipating? Possibly a bearish kicker signal. So what is the first thing, if you were long and you saw it gap down below the previous day's open, what's the first thing you should do? Close it immediately. Exactly. If BMI has a gap down in the oversold condition, would you expect more downside? Remember, the kicker signal doesn't require any confirmation of the stochastics. A kicker signal works effectively no matter where your stochastics are. Okay. Let's see if I've... Okay. Any other general questions? I was talking about the last candle. Gap down in the oversold. Would you expect more downside? Probably not. So if I saw it do this today in the oversold area, gapping down, what's this illustrating? Pretty much a wave 1 and wave 3 are about the same. So where do I have my safety stop? I wouldn't want to see it trade back up above today's high. If it does that, it tells me that's where the bulls are stepping in. What is the implication of an inverted hammer at resistance like helix? That's really not an inverted hammer as it is a kind of a doji. And what other things can you see setting up here, Gail? A little kind of wedge formation, which means which direction is it going right now? Probably sideways. So when do you want to do something with this? When it breaks out one way or the other. In candlestick signal helpful in buyout scenario? Not really. No. Harry, this is the current risk-reward factor for it being bought out at 24. So what's your upside potential at this point? 50 cents on a $23 stock? What's your downside risk if they decided it's not going to go through? Down big time. If you were in this and it went up here, you'd be happier than a pig in doo-doo if this took a month to get up there. Take your profits, now go on to something else. All right. Oh, be aware of Helix earnings this evening. Let's see. I don't know. What did, were they good on Helix? Yes. Can't tell. The bid and ask is pretty wide. All right. So apparently, if they beat and it retreated, it is a what did that? What, wrong chart system. I mean, it's not very enthusiastic. Dan, whatever the futures are doing right now, let me take a look again. Right now, yeah, the Dow futures are down another 136. Doesn't mean anything right now. I mean, obviously, it's telling you that more than likely it's going to head down. But the importance of the pre-market futures are relevant when you're probably 10 minutes away from the open. That's where everybody's starting to make their buy and sell decisions. So the market could be down 200 points tonight, and when we wake up tomorrow and the market's about ready to open, they could be up 30. So it doesn't really matter what they're doing at this point. Up 14 cents after hours. All right. Okay, Jim, go ahead and do the double line. And then 4.8 seconds to the next double line. Too late to buy MKC. No, it's just kind of a steady eddy. If you're buying it, you're just buying it based upon the fact that it's staying above the T-line. AMAT has been drifting. You could be ready to go short on this on weakness. There's kind of your bearish belt hold, telling you that the bears are still in control. Disney, just stay long. I would probably use this level right here as a stop, because if it came back down through there, telling you that it's not going through this level, they're probably coming back to the T-line. CGC was in a downward trend. Now you can short it if you want to short it, if you haven't shorted it. Intel, nothing. Intel is just a toughie to trade because it really never has any major trend. It's too much of an institutional trader. PayPal had kind of a kicker signal yesterday. You stay long on this one. As stay long, J-hook pattern. And FAS, same thing. The bearish financials, J-hook pattern, stay long, as long as it stays above the T-line. Yecco kept backing off. So here's a perfect example, a couple examples of you start at 2 and it goes up here to 1750. You want to be watching your 10-minute chart. Let me see if I can pull up the 10-minute chart. All right, once it popped up and you started seeing it sell off, might be too late on the 10-minute chart. That's where I flipped to my 5-minute chart. I don't know if that's going to stay up. Maybe I start taking some profits right here. But This is why you go to your 10-minute chart, because they've gone from 2 to 1750 in 2 days. What do you expect is going to happen? Somebody's going to start taking some profits. AGIX, not coming up. XNET, little inverted hammer. This one you can be buying. Bullish engulfing. Stutter step, you can be buying this one with the anticipation they could take you up to the 50-day moving average. FedEx. Nothing. If you're short, you stay short. If you're short, you'll use the T-line as your stop. Square. This one, you got to be careful. Got a doji and your stochastic's flat. If it opens positive, you don't want to be short. If you're short, it needs to open lower tomorrow. AMED, we did. AMED, yeah, nothing on this one. And GNTX, that one you can be buying. Big bearish. Remember, the bigger the signal, the more compelling. There's been a change of investor sentiment. And Dollar General, bullish Harami, confirmation. I'd be a buyer, especially if it came up through this level, J-hook pattern breakout. Ori, obviously a buyout. Yeah, I'd be out of that one also. Zenga, nothing. Wouldn't be long or short, this one. APT, nothing. It looks like a very low volume trading stock. Weyerhaeuser, stay short. And Pets, that's kind of your message. That closed up high enough, Icker type signal. If you're looking to go long, if it comes back up through today's open, you can start buying, expecting a 45 degree. It doesn't matter, CB. It doesn't matter whether it's their economics, whether it's tariffs, whether it's grandmas selling China stocks. If the charts are telling you they're being sold off, they're being sold off. Salesforce, got to watch to see how they open this one tomorrow. Okay, everybody, we're still in kind of a bearish market, which a lot of people are saying, oh man, this is bad. It's not bad. If you started shorting stocks up here, maybe covering them and re-shorting them here. All right, last one, Chipotle. That's just not a good looking chart at all. No, I don't expect anything, Jake. You do what it already came back and tested the T-line and closed up here. Now you just watch to see what it does from here. All right, everybody. We'll see you bright and early in the chat rooms tomorrow. We'll see you there.